Hello viewers, welcome to my channel. In this video, we will thoroughly assess the effectiveness of small SIP investments. We invite you to watch this video entirely. Are you unable to invest more than 5000 rupees in an SIP due to a low salary or high expenses? In that case, you should explore the option of daily SIP. It's a helpful approach that could work for your situation. I'm excited to show you how much money you could have made by investing just 100 rupees a day through systematic investment plan. Consider the scenario of investing rupees 100 daily in a mutual fund from 30th September 2010 to 30th April 2025. To understand the potential total corpus during this period, we will analyze the historical net asset value of randomly selected mutual funds. This analysis will provide insight into the accumulation of your investment over the time. Here are a few mutual funds that allow you to invest a minimum of rupees 100 through a systematic investment plan. I found this information on Google. I will provide the list in comment section or you can search it on Google. Equity, hybrid and debt mutual funds permit a minimum investment of rupees 100. Not all mutual fund schemes offer this option. I am not a financial consultant. This video is based on my own research and does not advise the use of any mutual funds. I will showcase the potential investment value of committing rupees 100 daily from 30th September 2010 to 30th April 2025 in the Nippon India Small Cap, ICICI Prudential Blue Chip and Tata Hybrid Equity Fund. Let's explore the historical mutual fund NAV from the AMP website. Open your browser and search historical nav AMFI as shown on the screen. Click on the first link, Net Asset Value NAV History. After that, ensure that historical NAV for a period should be ticked here. You can select the mutual fund here. Either you can select from drop down or you can type here. And then select scheme name here. Okay, same you can select the scheme from this drop down or you can copy paste or you can type the scheme name here, and this is for nav from date and nav to date. So the difference between the from and to should not be more than 5 years. So here I have to extract close to 15 years of data, so I have to take the data in 3 slots. So the slot 1 will be September 30th 20102 August 31st 2015, and then click go here, this green button. So it's loading. Yeah, we got the data. So these are the net asset value and this is the time period is starting from 30th September 2010. You can download in Excel or in Word. So I'm downloading in Excel. I put the data in one Excel starting from 30th September 2010 to 30th September 2025. After that, you need to ensure that there should not be any duplicates on column D, which is nav data. So to identify the duplicates, go to condition format, select highlight cell rules and click duplicate values. This will ensure that this cell contains duplicate values or not. Yeah, we have the duplicate values. Now we need to remove the duplicate values. So we have to select column A, B, C, D and go to data, remove duplicate values. So here you have to select only nav date. Just click OK and then yes, all the duplicate values were removed. Here I will calculate profit and loss of each day of this mutual fund. I will use a simple formula to calculate the profit and loss on this day. The formula is today's net asset value minus previous day net asset value divided by previous day net asset value. In same way, I calculated the profit and loss for all the days for this mutual fund. After that, I have taken the difference between the NAV dates and multiplied by 100. Even the market is closed on weekends or public holidays, your SIP will be deducted and added to the mutual fund on the next working day. Let's say the SIP started on 30th September 2010. On next business day, 1st of October 2010, the investment value would be this multiplied 1 plus profit and loss of 1st of October plus SIP on 1st of October. This process will continue. Now we will determine the investment value as of 30th April 2025. On 30th April 2025, the total investment value is 34,79,321. This indicates the cumulative returns of this mutual fund is 562.7279 and annualized returns are 13.8466. Cumulative return refers to the total percentage change in the value of an investment over a specific period. It shows how much an investment has grown or declined from its initial value. Annualized returns is also known as compounded annual growth rate CAGR, represents the average rate of return on an investment over a year, taking into the effect of compounding. Kindly note that I have excluded the SIP on 31st because some funds have restrictions or specific cutoff dates for SIP transactions. If you had invested daily in this mutual fund from 30 September 2010 to 30 April 2025, your investment value would be approximately 3.45 million. Thus, a daily SIP of 100 in a small cap mutual fund generates significantly higher returns over a longer period. Now, let's do the manual calculation for ICICI Prudential Blue Chip Fund. I have taken the historical NAV from Amphi India for the ICICI Prudential Blue Chip Fund from 30th April 2015 to 30th April 2025. I calculated the profit and loss for this fund. You can see it in column E. If you had invested daily in this mutual fund from 30th April 2015 to 30th April 2025, your investment value would be approximately 8,70,000. This indicates the cumulative return of this mutual fund is 141.952% and annualized returns are 9.2378%. Now let's do the same thing for Tata Hybrid Equity Fund. This was one of the oldest fund launched in 8th October 1995 with the minimum SIP amount of 100 and minimum lump sum amount of 5,000. I was unable to obtain the historical NAVs from the start date of this fund from Amphi India. Instead of, I have NAVs from 3rd April 2006 to 30th April 2025. Based on this NAV, if you had invested rupees 100 on daily on this fund, then the investment value would be 26,38,515 rupees by April 30, 2025. The investor who is over 45 years old may consider investing this fund due to its lower volatility compared to the equity fund. If you had invested 100 rupees daily, then Nippon India Small Cap Mutual Fund for 15 years, you will get 13.84 and 9.23 for ICICI Prudential Blue Chip for 10 years, 7.259 for Toyota Hybrid Equity Fund for 19 years. HDFC Infrastructure Direct Plan would fetch 8.61 for 12 years, and Nippon India Growth Fund for 15 years you will get 10.55%. To conclude, a daily SIP of 100 is better than a monthly SIP of 5000 if the investor has chosen the correct mutual fund. It has the potential to generate more corpus compared with the monthly SIP of 5000 for long run. I hope you find this video very informative, and here are the few money rules for the investors. Your salary won't make you rich, investments do. You need multiple income streams, one paycheck isn't enough. Savings alone won't make you wealthy, you must invest. Debt can be good or bad, use it wisely. There is thinking long term. Wealth takes patience. Thanks for watching. Don't forget to like, comment, and subscribe.